All right, Friday Q&A. Great questions starting to pile in. Not surprising with you guys. It's been fun having you this week, and all the camaraderie, all the help that you guys have done for each other, the thought-provoking questions, the kind words, all of it. It's been a really cool week. Let's do a little update. I did take one little scalp. So I was not trading. I saw some of you nail this and or this. I wasn't trading at that time. I was taking a break. But this little fast trend guy here, right? Little bit of sellers trying to push it a couple times, twice, and then a little turn as we go for that last push into this destination area. Of course, what do I know what's going to happen next? But that's the framework. That's the view. It's kind of funny. Ultimately, this week was super simple, right? It was a little bit of overhead resistance, but big picture narratives finishing up. And we're seeing that finishing up into the final day here of the week. Everything else other than that is just tactics and shorter term situational stuff within the big picture context of that. Do I think that the top is in? Yeah, I do. Anytime we get areas, not lines, right? This close to the major destination, and we see the tape show us we're changing, right? We're shifting power here. I believe it. Doesn't mean it's going to be correct. But those are the signs, and they're right there in front of us. So my scalp was, again, based on a little bit of order flow there, a little bit of a fast trend. Took a nice scale here into at the last moment at this stall at the 2. And then based on the severity of that selling there, I scratched it. It's one of those things where at that point in time, you feel like you're picking up pennies in front of a steamroller, right? Just getting a little bit extra out of that market, what's left on the table. So all of a sudden, everything is starting to be skewed against being long higher and higher, right? So I wasn't going to mess around. I was in from a compromised DVA trade location. Where was I in from? Here. What standard deviation level is that? Well, it's the 1.75, 1.8. It's not a great place to be long from. So when we turn from the 2 and there's sellers behind that move, I'm not going to stop out below these lows. It's just I'm compromised. So the aggressive level of I'm going to scratch out. I'm not going to lose money on this silly situation, right? Is high. So I was going for, something closer to here, like what we ended up getting, but got shaken out of it. Wasn't in from a good spot. Like some of you, awesome. In from here. Should definitely be, if not flat, healthily scaled here. If you do want to leave a core on, hey, it's end of quarter. We could easily see just bizarre fireworks, right? We could see wild stuff. Sellers still piling in here. People starting to look for that exit. The narrative has been completed in a major way. So I'll absolutely be looking for potential shorts here into the afternoon, into the close, see what happens as long as the sellers remain in control of the tape. Let's see if we go rotational, at least RTH. It'll go rotational first, slightly. It's a little higher. So we'll see. Just wanted to update you guys though, midday here. I did take one additional trade, and that's what I think about the hard right edge. Trader Biku says, Merritt, you occasionally, let me just finish this bite before I. You occasionally talk about market energy. What is the core of this idea when distilled into market generated information? What's important and or helpful about framing market behavior through the concept of energy? How do you make use energy in your narrative, reading and or trade execution management? So finally here on a Friday, you're going to ask a hard enough question that's just going to stump me. I can't figure out if I think you're a some kind of a professor or maybe an engineer. I'm interested in what your profession is. Okay, so what's the core of this idea when distilled into market generated information? I think to a large degree, rhythm embodies a lot of what we're saying. Where we are within the overall developing value framework is the MGI that represents a lot of that. What's helpful about it, it manages expectations in a healthy way. It keeps you from expecting something that you think is a 50-50, or heck, you think is a high degree of success, a probability of success, and it's simply not, right? The more extreme you get, the later you are in a rotation, whether that's short term or big picture or whatever, the market runs on an energy source, whether you want to think of it like an electric battery that gets drained, whether you want to think of it like a combustion engine that runs out of fuel, whatever the case is, whether you want to think of it like gravity having an effect on a pendulum, that's probably a really good one. But at a certain point, it's out of energy to continue doing what it's doing. And I think rhythm, I think the DVA framework, and I think order flow are three things that really encapsulate that mental model, if you will, for market movement. I don't think I can add any more value than you probably already understand in terms of how I put that to use. From a narrative perspective, right here, right now at the hard right edge. I think it's harder for the market to keep going up than it would be for it to pull back. Does that mean that's what's going to happen? No, it doesn't, right? We saw that this morning. I was, aggressive with shorting there for a while I felt the market was still fairly rotational before we converted that condition to imbalanced up. I was shorting upper extremes of a rhythm move. I was shorting upper extremes of intraday DVA. I was shorting upper extremes of weekly and monthly. But what was against us? What was against us today was that there could be that last energy push to the destinations on the yearly and the quarterly, and that's what we got. Yet again, I missed perhaps the best, easiest trade of the day. Wasn't at the desk. That's 2 days in a row where I've not been there for perhaps the easiest trade of the day. And look, guys, I mean, I was taught this in New York. the guys who are in their seat and available for opportunities are the ones who get to participate in those opportunities. If you're not in your seat, if you're not ready, a lot of times you're going to pay the price for that. And the past 2 days have been a perfect example of me not being there for it. Now, should you also beat yourself up for every trade that you're not at your desk for? No. Your job is not to necessarily be a robot and to just forego everything else in your personal life or whatever and just be there for market opportunities. There needs to be some of that, but you need to find that balance. And so for me, this is a harder week on me. Sound like a total, I can't think of a politically correct word to say, so I'll just move on. So breaks during this week, especially towards the tail end of it. I'm an introvert. I don't like talking out loud all day. I don't like people looking at me and, you know what I mean? This is taxing on me energy wise. So a lot of times in between our sessions and different things like that, I've got a lot of stuff going around the house, and just getting away and taking the breaks are important for me. So I'm not going to beat myself up over not being in for every single opportunity. But unfortunately, this week where we're kind of on that like down a little bit here again, side of the equation, unfortunately, it could have been the difference maker, right? For having a really nice week versus kind of a crappy, slightly down week. So, all kinds of faults there. But anyways, back to the question. I think I covered it. That's my thought around energy. The market needs energy to move, right? Sometimes, and this is more rare, sometimes there's a high amount of energy and we don't go anywhere to a large degree. That's because the energy is just strong opposing forces both directions. That doesn't happen as much. More times than not, we see energy like today from buyers. We get some directional movement, even though until this afternoon, there was almost no rotation, right? If we were to throw a zigzag up indicator here with the settings that have been appropriate for the past month, it might not even give us a down rotation, maybe from here to here, right? So it's super tough when you're not getting rotations. Energy will keep you honest. Energy will keep you in check. The thought of it with markets. Hosea says, if price, which was previously established imbalance up or down on a long-term VWAP chart, say the monthly or the weekly, has pushed far enough into the long-term VWAP DVA for us to consider the imbalance as potentially failing, is it valid to take trades in alignment with our expectations for price to retest the area of the failed imbalance? I get it. That's a great question. We'll read just in case there's more, but I understand. For example, let's draw it so everybody understands, not just me. I'm used to understanding these things. Where can we draw? Where can we draw? Where's the market not been? Market's been everywhere. Doesn't matter. We'll ignore these lines. I'm not even sharing my screen. Let's share the screen. Okie dokie. For example, weekly's been established, imbalance up. Begins pushing close to VWAP. Acceptance now clearly inside the weekly development value. As we now expect an initial return pullback, or as we would call it, an extreme fade to weekly development value area high, right? Is it valid to seek this long opportunity, right, as we push there? This is such a great question. On one time frame, just in isolation, in this case, it's the weekly, without even more than one time frame, one aspect of this time frame, the DVA of this time frame. We're not even talking about the PVA, which would be a factor here. in the isolation of essentially one reference on one time frame, the answer is no, there's not opportunity to do that. However, that's not how we operate, is it? Other time frames, other references, other variables affect our holistic view, as we've talked about a couple times. So it's not going to be hard to give you an example of what we might do at a point like this. Let's pretend there is, a big, doesn't make sense here. So let me change my tune. I was going to say there's a CVA. Let's just do it for the sake of argument. Okay. Just for the sake of argument. We got a big important CVA right here. Recently we'd broken out of it. We're coming back to kind of retest it. We could have been balancing a lot back over here. So it's not super, super immediately fresh, but it still could be valid because it's a 12-day CVA. We could have the monthly, which had kind of been, let's call it almost fast trend since its breakout, and the monthly had not gotten a nice imbalance pullback. So here's monthly developing value area high since we broke out of it. And it's right here. Okay, here's monthly developing value area low. I know this is getting messy, but hopefully you guys can follow. So with just this little bit of information, it's going to be a situation where I feel nice about the bullish opportunity from here, even though we now have what? Dissonance from the weekly developing value area high. But we can say, hey, more times than not, we do get retests of areas where we have condition shifts. So temporarily, almost like our hypos the past couple of days, temporarily short so that we can get long, right? We could say that the weekly is temporary long so that it could be a full-on bearish line in the sand influence. It's going to be from up here, but if you have more things potentially that are saying long is a good idea, we can do that. How are we going to use the weekly? As a spot to either get flat or to heavily scale out of a position that does work from the confluence of the monthly and the CVA and whatnot. Weekly VWAP, right? We could even say, oh, weekly VWAP, fine, right? Not a big deal, but it's a place where weekly rhythm, right? You're down on the weekly with a nice little rhythm. Okay, if it starts to turn, it's a place where there's runway before we really hit that resistance. So it's a little different than the way you asked it, like, could we use that singular reference as a way of thinking of taking that trade, looking for that retest? The answer is no to that. But hopefully this more holistic example is a way to think through how that might actually be used very, very effectively. Great question. SL Bentley says, I know you don't use this stuff, just wanted to show how the levels from opening range very often align with the same levels you guys use. It happens a lot. Just thought it was interesting and why I like Merritt's DMI. Yeah, look, if you're going to have a trend day, opening range works, period. If you're going to have a more complicated NADRO day where we need to go lower, so we go higher, whatnot, NADRO is going to be tremendously superior. But anytime you have a trend day, opening range strategies are going to work because it's going to be a break of the opening range. You're going to get in. And if it's not very back and forth and you do get a trend, it's profitable. It's, a lot of times people overthink opening range and what the significance is of it. Opening range is the simplest strategy in the world to where if it breaks whatever opening range you use, you're going with that. And if it's going to trend, like I said, it's going to be profitable. It's not. Considering Matt says, considering massive absorption from the end of yesterday, would that suggest the big institution firm was happy to accumulate at that price in anticipation of move higher over the next week or so, which could equate to today's grind higher? Yes and no. So guess what else was happening? Somebody else said, holy crap, we got to get out. We got to sell, and we got to do it right now. Hopefully there's liquidity for us. And whenever they saw that there was some liquidity, they were just giving it everything they've got. So if we were down today, could we say that there was a really smart seller that really took advantage of some passive, big term fund? Because that could lead to the grind lower today, right? So there were two parties involved in that big exchange yesterday. One of them was passive, one of them was aggressive. I don't feel that there's any implication of one of the two parties. In fact, I tend to think that the more aggressive, the more impatient of the two participants is actually more telling of the landscape. But no, I don't bring an order flow situation from the prior session, especially into the close like that, where it's just people taking advantage of whatever liquidity to get their big funds or whatever positioned the way they need to, or hedged the way they need to, whatever the case is there. Options dealers hedging, I don't take that into the next day and think that there's large implications. Does that mean that I'm right? Does that mean that I know exactly everything about that? No, it doesn't. But that's my take. Matt's asking, would we hold the position till the close today? You certainly can. If the either way, right? Holding positions for whatever longer period of time is simply a product of, is there more room for whatever the narrative read is telling us is where the market's trying to get to, right? I'm not concerned about this monthly 2 anymore. I'm going to delete it off my chart. I'm not, and we need to adjust where the weekly DVA is. Jake says, question regarding using options with Nadra. I'm interested in potential quarterly, yearly extreme fades. So as long as we see some excess created at the highs and momentum shift, planning on executing this trade using a ratio spread to hedge out the risk of us going imbalanced up on the higher timeframes and reducing the time decay. I've heard you mention before that you're considering opening a Taros options desk. I'm curious what spreads you guys use to execute, on what time frame they typically executing their trades on. They're looking for bigger picture swings. Are they using options intraday? So we don't have an options desk yet, so I can't answer any of that. I have students who are doing things on either end of the spectrum. I have students who are using almost exclusively almost, either 0 DTE or, very short-term weekly type stuff, and they're almost exclusively doing it intraday. And then I have people looking 30, 60 days out, doing basic vertical spreads. I have guys doing, no one's doing the ratio spread. It's interesting. What's it called? Oh, like what I can't remember what this is, but I know some people are doing, one guy in particular is big on the risk reversal trades. And me and a handful others like to just get naked short options, just to sell them and to delta hedge where appropriate with futures. So that's as much as I can tell you. In terms of this trade, you trying it now is really aggressive. It might turn out to be, the best trade ever, but at least on the quarterly there, haven't exactly touched it. We could easily run to the 1.5. We could really push the upper extreme of yearly / quarterly. That's going to be very difficult to do right now based on where we're at with the monthly and the weekly and stuff. Right now is short term a bearish position in Yes. But what I often like most is to start to get some lower time frame to confirm the thesis. I think that's a great way to play it. You start to see, for example, the weekly go rotational. You start to see CVA structure begin to hold from underneath, things like that. Get some kind of confirmation. Shorter term is really telling us it's working. Even prior value, right? We're in this situation with strong value migration higher. One, 2, 3 days. We could start to see at least Monday. Can we start to hold at least inside prior value from the prior day? Can we start to, put in a CVA here? Can we start to hold below prior value from Friday on Monday? Things like that can all be really nice in terms of seeing some confirmation for a bigger picture thesis, because the less you do what I'm saying is a good idea to do, the more you're going to get steamrolled, because the trade just simply was in a good trade location, but it wasn't confirming on other timeframes, getting that supporting cast for a good narrative. But again, there's pros and cons to everything in trading, including what I'm saying here. If you take the more aggressive approach, you're going to get better trade locations. You're going to improve your risk reward. Maybe something with the pricing of the options being that early contrarian is very helpful, right? Versus waiting for it to crack. In this case, all of a sudden VIX goes up, premiums are more costly, whatever. I don't know. I'm not an options expert, but a lot of things to consider there. I do think it's great. Matt says, this is the micro ES delta. It's vastly different from the regular ES. Could you explain why? I have a theory. Yeah, I mean, never pay attention to analytics from the micro product. I would not be surprised if the majority of the volume done in those products is just essentially market maker / ARB type people, computers, who are matching up where that product should be trading versus others, right? Think about it. Like, if something is mispriced where the S&P is a couple ticks higher and that doesn't move, this is not something you could take advantage of as a human, but algorithms can. They know that the bid shouldn't be somewhere and they hit it, stuff like that. So I'm not concerned with differences in the micro versus regular products order flow. It's just too much of a arbing and not the real players who we're trying to follow and see what the footprints they're leaving in the snow are, right? There we go. A bit of an engineering background for Trader Biku. Fat Cat says, in these more recent market conditions within the last 6 months or so, have you noticed trades don't run to target before shaking out of the entry? How are you approaching this, if true? It's absolutely true. I have told the Nadro community a couple times, hey, a lot of our big picture trade thesis destinations aren't getting hit in a direct move with a single imbalance up for the day, intraday, without massive volatility the other way, running stops, not allowing for those moves to be done in a single trade. I've said this repeatedly on Trader Tuesdays, all over the place, on AGMs. So absolutely, your read there is correct. I do think that I can't think of how long, maybe the past 3-4 weeks, it's gotten much better. Narratives have been working much more smoothly. We're going extreme fades to destinations. Just take a look at the quarterly, type move. the recent bearish shift in the monthly and then the bullish shift, and we traversed that DVA fairly smoothly. Then there's some herky jerky, but that's after the destination was hit. So it's fair game. That's the way it always is. So how am I approaching this, given that we agree that it's true? I have been scalping more. I've been taking profits sooner when I don't like what I'm seeing on shorter term charts. I've not been holding as large in terms of a percent of initial size core positions, because I've been wanting to base more of my profitability on the shorter term stuff. Can I get a good rhythm rotation in my favor? Can I get a traversal of DVA? Can I get a move to take out a poor high? Can we traverse yesterday's value? Can we move across this CVA? Those shorter term things, I'm scaling out heavier for, because there's volatility that kills direction. That's what the past year of trading has looked more like. Volatility that kills direction. Volatility that you look like you're going to the moon, then you look like you're going to crash to zero, then you look, you know what I mean? It's back and forth with volatility, as opposed to what we saw yesterday and today after the opens. No volatility, no back and forth, no rotations, false momentum shifts, right? So that's how I got caught not looking so hot this morning, is because I was looking for rotations, looking for momentum shifts, and there were short-term momentum shifts, but there were no rotations to follow through from those. So I lose money just like I'm supposed to. So anyways, I got a little off topic there at the end, but that's it. I mean, it's not rocket science. We have to take profits a little quicker in conditions where it's just not conducive to bigger picture targets. Just, hey, let's hold a huge core position for this gain. That's been a tough game. Now, as I've told my students and traders and whatnot as well, you can keep slugging it out if you want. Traders who are, for example, all in, all out, big targets with Nadro, they can make a lot. But guess what? They're going to have lower win percents, more severe drawdowns, more frequent drawdowns, right? It's like any generic trend following system, all in, all out, versus a scale out mean reversion system, right? We know what those equity curves look like. One is smoother. The other, the trend following one, has longer drawdowns, but then bigger gains when it's right? So it's a choice like anything else in trading. If you're cool with the that dynamic of that equity curve and whatnot, then you can do it. It's fine. It's not what I like to do. I like to be a little more adaptive, a little more dynamic to what I'm seeing and whatnot. All right, so look, guys, order flow, we're back down to 0. Okay, so that contextual shift that what time did I post that, right? An hour ago, almost an hour ago. That is persisting. So RTH, not quite halfway to VWAP, very close. So I'll be watching RTH to see if we can get, also, let's see what the buyers have as they go higher. Right now, it's an ETH imbalance pullback off delta neutral. So let's see what the buyers have. If the buyers are weak, if we can kind of hold a flaggy rotation like this. So here's DVA. If we can do something like this, right, we could short that. Because the acceptance picture doesn't have to be on the rotation that probes in. Time acceptance typically occurs on the counter rotation, right? 100% of that rotation is inside of DVA, as long as it becomes enough in terms of rhythm for the current rhythm, which is tough to read, but yeah. What do you generally recommend regarding portfolio percent risk per trade? Do you suggest a standard 0.5%, 1%? Do you include win rate and therefore likelihood of certain consecutive losing streaks to reverse engineer that? What are your thoughts on trading with a smaller account size and larger percent risk, but similar initial USD risk as a way to get experience with growing the account size more quickly? Well, first and foremost, I'm a fan of what's called, like, in the CTA world, notionally funded accounts. So if you've got 100K for your trading capital, how much do you need to put in your trading account? Should it be 100K? I think no. Look, bad things happen. Sometimes brokerages go under. It's very rare, but bad things happen. So there's one reason not to put it all in a single brokerage account. Another reason is you could really go off the rails. If you got 100K in that account, you can really hurt yourself in a futures account really quickly, right? I think that in terms of, and I'll get to your main question, but anyways, how much, like what size are you generally trading, right? For your tightest stop, therefore your smallest risk in terms of ticks, therefore your biggest position size. What might that look like for the products you're trading? So give yourself the margin, right? In terms of how much you put in, margin to be able to do that, plus some type of drawdown. That could be a multiple, such as like 3 daily loss limits, for example. So, it's not annoying. You have to send another wire transfer or whatever if you have a daily loss limit, right? If you don't have, because now all of a sudden you can't meet the margin for your full size that you want. But think through those variables and kind of come up with an account size that makes sense, and then pull money out as you make money. A lot of people don't do that, right? They grow it up and, they got a 20K account over here and they grow it to 50K, and then they really screw up. And those are the people who look like this on their equity curves. So pull out money, just keep that 20K base periodically, once a week, once a month, whatever. After a really big day, pull it out, keep your base in the account. That's a really good way to do it. Okay, so, but in terms of percent risk, now we're getting to a very complicated matter. We're getting to preferences, okay? We are getting into the conversation of risk of ruin. Win percent can be a factor if you're going to get really nitty gritty about it. Here's the general approach that I like for folks. You start on sim, which is no risk, okay? And then you go to as small a live risk as possible, 1, 2, or 3 micros. After you've done well on sim, trading 1, 2, or 3 micros, okay, on sim. Now you see how already the conversation isn't about whether you're a multi-billionaire or whether you've got, no money, waiting tables, right? The conversation isn't about that. It's not about percent risk. It's about, let's start as small as possible and let's build it from there. That, I think, is the way that I like it. So again, if you're a big time wealthy individual, I still think you start out with a handful of micros, and you scale it responsibly from there. It won't take you a tremendous amount of time before you're trading some decent size on the regular E-minis or whatever, with a decent scaling, plan over a period of responsibly having a really good month, good risk adjusted returns, those kind of things, and then adding to what you're doing. So I like that better than how much money do I have, and that being the determining factor for trading. Now, I'm speaking from a developmental perspective. Your question might be, well, Merritt, I'm the best trader in the world, right? How much should I risk? That's a different conversation. Now you can get advanced with those things that you're considering. And ultimately, there's still going to be some personal preferences. How are you balancing your other business ventures and real estate holdings and longer term investments versus the split between that and your trading account? And how do you want to balance that? It gets really, really, complicated. And ultimately, there's no right answer. Obviously, if you're going to take 10% risk per trade, your risk of ruin is just astronomically high, right? Even with a high win percent. So you got to keep it reasonable. But there's no perfect one size fits all way to handle that. I think the first thing I said about the developing trader is most appropriate for our audience here today, most likely. What chart setting are you using in Sierra for chart update interval? I don't know. I probably have it set on whatever's default. I'm not a Sierra superpower user. Is that in general settings? Update. Chart update interval. 250. What would you say a good amount is for one ES lot? Are you asking account size? And number two, are you going to be holding overnight? So your intraday margin for the S&P is going to be, I don't know, anywhere from what, $500 to $1,000. So you just need to be able to cover that margin and then give yourself a handful of daily loss limits. That's what I would do. So, if you're going to risk $700 a day, that's your DLL, then give yourself 1,000 for base margin or whatever that is, plus 3 daily loss limits. So 2,100 plus the 1,000, $3,100, right? Would work for that scenario, I think. Obviously, you could easily get yourself in a position where you have to fund more. So I'm not saying that like you got $3,100, you can trade S&P for the next year and you're fine. No, you're going to need to refund that thing if you're, losing any money at all. So, but in terms of like what I said earlier with like how I would kind of recommend with your funding and things like that, I'm a big fan of doing it that way. Doesn't work for everybody. I'm sure people, there are a lot smarter people than me out there. And so, you guys might have good reasons as to why that doesn't work for you or whatever. I get it. Fine. All right. We have a micro extreme fade on the RTH, almost a micro extreme fade on ETH, off of delta neutral, sellers turn it. Could be an aggressive entry there. For sure, guys. Fat Cat is saying he feels 2 lots is easier than 1 as you can scale. For sure. Being able to scale typically smooths out equity curves. It reduces those long periods of time where you're not catching those bigger winners or whatever. Especially for the longer and longer your desired hold time is. Emotionally, a lot of people find it hard to sit with open P&L without reducing risk, without paying themselves a little bit. But we all need to assess how how much of that for you is an emotional crutch, and to some extent that's okay, but not to a large extent, and how much of that is a true like desired way you're structuring your trading business. J Rob says, hey Merritt, I've heard you speak about reducing position size while in a trading slump. Do you increase size when you're on a hot streak? If so, can you speak about what metrics you would use to determine you're on a hot streak? No, in terms of increasing, it would be increasing to the overall, R value, which whether you want to look at it as a percent risk or a scaling type plan or whatever, adding contracts to what you're doing, adding risk, adding bigger, go back to your daily loss limit that you were at before, whatever. I don't, and then let's say I am there, I'm not in a drawdown, I'm at normal trade mode and I get on a hot streak. I don't press harder in terms of risk per trade. I don't. What's the next phase of trading following a hot streak? A slump. So I would rather be if I really had to press harder or whatever, I would like to press harder after a drawdown as soon as I start to at least stop the bleeding. That's when I'd like to press the hardest, because that's typically when the nice recoveries are and your ego's in check and you've dialed, for me, remember that pendulum of like super discretionary, all kinds of decisions, just all kinds of stuff versus like more process driven. I get to a healthy place there, and that's typically where I trade my best. So short answer is no, I don't trade bigger when I'm on a hot streak. When I'm on a hot streak, I'm thinking, this isn't going to last. That's the mentality there. Now, there is a form of we're on a hot streak, market conditions are super favorable. Let's keep trading. Let's not take any breaks. Let's tell my wife, no, I can't hang that light fixture for you today. Even, at weird hours or whatever, like I need to eat at my desk here. We're pressing. And I don't mean that from a risk perspective, R value. I mean, we're staying in our seat. We're staying open for the massive opportunities, the frequent opportunities that are there for the conditions. And we keep trading, keep trading, keep trading. I don't care that I'm up more than I've ever been on the day today. I'm not going to say, oh, good day, let's go pack it in and feel good about what we did. No, keep pressing. That's a form of aggression that I do. Savas says, is the only way to get to your desk through the tryout. If someone can show you proof of a few good months of consistency, would you consider getting them on board? Yes, I don't know. Yes, we'll consider it. Yes. The most recent trader that we're just starting the onboarding process with is actually an AGM student of mine from, I think, 2020. Obviously, it's 2023. They've been working hard for 3 years now. They reached out and said, hey, Merritt, I saw your tweet about putting up certain risk-adjusted returns for a certain period of time in a live account. And I did it. Here's those results. And we're hiring her. We're in the process of onboarding her. Something could go wrong, but I just want to keep myself legally open there. We're onboarding that trader. So yes, the most recent Apteros trader coming on board is from exactly that, from their own live trading, not from our tryout. I prefer the tryout. For me, it's less of my time in terms of verifying results, all that kind of stuff. it's in our system, right? Our closed system. We can monitor you the whole time. We know everything's on the up and up. Somebody sends me a spreadsheet and said, "Hey, look at how much money I made." It's like, okay, let's let's get to the bottom of that, shall we? Anything else before we go? Do you monitor traders during the evaluation process? Not really. A lot of people think that if you're in the Apteros tryout, like I'm sitting there looking at what you're doing every day, and they feel a lot of pressure. I can assure you, I've got other things that I'm doing rather than looking at all of our tryout traders every day. I'm focusing on my trading, my desk traders. I'm monitoring what my AGM students are doing, in that order. If I see that a trader is doing really well in the tryout, I might start to pay a little closer attention to their daily results. Hey, how did Joe Blow do today? I know that they've been trading really well. I recognize their name, right? I like do really well in the tryout. That starts to get my attention. Merritt, you mentioned a scalping class the other day. Can you shed some light on the timing of that, weeks or a couple months? I don't know. I really don't know. It's just an idea that I have. It's like I was really exclusively trading stock standard NADRO. And then given the conditions of the past year, I've been scalping a lot within the NADRO framework, right? You guys have seen me do some of that. And so there's just so many more minutia that I understand are a part of that scalping process that's not taught in the standard NADRO course. So I'm just thinking it could be a good idea. It could be very useful, given that I find it useful in the conditions that we're in. And so I'm just thinking through, like, what would that look like? What are the main points I would teach? I'm trying to pull stuff out of myself. Like, okay, when I'm scalping, how do I think through this? Because when I'm scalping, a lot of it is much more intuitive than just the general NADRO method. There's a lot more seesaws than even the regular NADRO. There's a lot of compromise, or you wouldn't even call it compromise because there's more freedom within the scalping that I do. So it's something I'm trying to decide. Number one, can I get it all out objectively onto paper to where I can actually teach it effectively? Is it something that people even have an interest in? A lot of people, I think my perception is that a lot of people will look at how many trades I take, for example, in a day. Sometimes when I'm posting my fills on Twitter or something, and they're like, "What in the world? Trading on a 1 minute chart, a 30-second chart, this low volume chart, that's insane." So a lot of people don't really get that short-term world. And so I just don't know if it would be worth my time if there's, enough people interested in trading that way. So it's just exploratory at this point. Curious what do desk traders often communicate through session on mics? Is there a team element? Yeah, it depends on the group. But yes, for years we had a morning meeting where they all got on the microphone together and all that kind of stuff. Now there's a little bit more of some separate groups, smaller teams that are formed. And most of those certainly do those things as well. We have some desk traders that prefer to be a little bit more of an island, just kind of working directly with me. So the desk is at this stage is there's a lot of kind of like little segments to it. And I think that's good because not everybody wants the same thing. Not everybody is a NADRO trader that's on the desk. So we piece it together as good as we can. What is the smallest time frame you monitor? Do you have 15, 30 second, 1 minute? You don't use a dome, correct? Yes, correct. I don't use a dome at this time. I don't use a footprint at this time. I might use a footprint chart tomorrow, right? I won't use a dome tomorrow. The smallest time frame I monitor is exactly what we're looking at here. 3,000 volume. That could, again, that could change tomorrow, right? I could make it a 1,000. I could make it a 8,000, right? But what you see here is the smallest time frame that I look at. I have done things in the past. A lot of some people think I use like real small second-based charts. I only did that to show my fills when I was doing some trading with a particular brokerage account that I think I needed to do time-based charts and my fills were too messy. So I was zooming in just to show the detail of my fills. But that's not what I'm looking at to trade. So yeah. All right. Anything else? Still at delta neutral in the ES. A couple people typing, so I'm just giving them time. What separates the more successful traders from unsuccessful ones? What are they doing that others don't? Just the work, I guess. I mean, we could talk about it all day. It's a very, very big conversation to be a good one to have a drink over. The work is huge. It's not just the work. I think there are, like anything else, aptitudes, but not in the sense of like someone just could never be a trader. What I mean is that there are aptitudes or talent, even, if you will. I know I'm a believer of kind of the talent is overrated, school of thought. It really is more about the work, but there are aptitudes, there are talent at the same time. But where I think that is the most important factor in trading is finding the space that works for you, the strategy, the style, the niche, whatever you want to call it. I have told traders in the past the cold hard truth of my opinion. I do not think you are cut out to be a day trader, right? There's people in our community I've told that to before. And it doesn't mean that you're dumb or somehow not as good as me or someone else. It means that you are different in your unique makeup and strengths and weaknesses, right? The classic example is around someone who's way better at multitasking, connecting a bunch of dots, thinking slower and deeper about things and intermarket relationships and whatever. That's like you're a better portfolio manager, right? Someone who has more self-awareness, has better at times physical reaction times and speed and that kind of like gamer skills. Could be really well suited for day trading, scalping even. There's just so many factors in terms of individuality that go into finding that success or having more success. And it's that matchup of the style that you're trying to trade and who you are and your skills. I think NADRO is a really cool, I think one of the reasons why NADRO is growing so much in popularity is that it allows for people to find that space within it. It's not taught as here's the market, here's the time frame, here's the tool. That's not what it is. It's this big top-down approach, which you could even be more heavily skewed towards the top of the top-down approach. You could be more heavily skewed to the lower end of the time frames of the top-down approach. You could be more structural based. You could be more VWAP based. You could be more order flow scalp heavy. You could be more intraday position trader. You can swing trade. You can bring into options into play. You can find a place within the beautiful framework that is NADRO and reading the narrative of the market and intraday frameworks and order flow and all that kind of stuff. So that's one of the reasons I think that people don't talk bad about NADRO, really. I'm sure there's someone out there that talks bad about NADRO, don't get me wrong, but we have a lot of people who would defend it. It's not just me saying it's good. And I think the things that we do and the what people see in terms of when they get their eyes open to what it can do, it's pretty self-explanatory. Why don't we have the fanboys that some of the other Twitter personalities have? Hear me out. People have told me this before. People have told me that they don't like my tweets. They don't retweet my tweets. They don't even follow me with their real account. Some people. They put me on a list. They do all those kind of things. So they don't want more people to learn about NADRO because ultimately trading is a competitive space. That's pretty funny, right? That's when you know it's something good, is when people are telling you that they're secretive about it rather than, you know, just the fanboy or whatever that's just retweeting everything and saying everything's great all the time. Like we see with some of these other folks. So anyways, I think that's kind of cool. Only thing I can think of is how much of NADRO would you say is its own strategy versus methodology, if that makes sense. It doesn't make sense to me. As far as workspaces, I'm thinking about moving out all my stuff upstairs, now an empty nester, to create more going to the office like mentality, more concentration, less distractions. Any thoughts or recommendation? What a question. It's something I don't think we've touched on at all this week, and that's environment. I forget when, recently, past couple months, moved down here to the basement. I'm in the basement. It's quieter. There's no kids running around. My wife's noisy. It's just a quiet space where I can stay focused and come to the office away from other stuff, right? So environment is really important. Your physical environment, like you're talking about, like I'm talking about, but also your digital environment, right? Because we're trading on computers. We're not pulling up our phones and calling a broker. Your digital environment is super important. That's why things like our community, having a journal, having accountability, doing the things that make you essentially like you're on the desk, right? Even if you're not. Get all the benefits you can from mentorship, from peers, from mentoring people, you teaching people below you within the community where you see that they don't understand something as well as you do. That's going to make you stronger. Being involved with that whole above you, beside you, below you type diagram that I've drawn out, and I think I had a blog post on once or something. You know, your whole circle of influence with trading, and that environment that you create is huge too. Not just being able to sweep your mistakes, your repetitive mistakes under the rug. Nobody's going to know about it. Nobody's going to call you out on it. You know, create, I think that environment is even more important than perhaps than your actual physical environment. You could, the person who's trading on from a laptop in a coffee shop with a great digital environment, that community, that accountability, those kind of things, I think would do better than someone who has the best office setup in the world without those other things that I'm talking about. I would give the nod to the other person. All right. The last Q&A of the week. Great questions as usual. We will see you guys. We'll do a little bit more big picture review, kind of like a weekly kind of wrap up after the close. We'll see you there.